Vanguard just did $1 billion in Bitcoin trading in their first 30 minutes. Larry Fink confirmed sovereign wealth funds are buying Bitcoin. They're buying the dip in the 80,000s. Bank of America is recommending 4% allocations to crypto/Bitcoin. But here's what no one's talking about. The Fed just injected $13.5 billion into the system. This is the biggest injection into the system since 2020. While everyone's worried about the price, the biggest liquidity wave just arrived and it's going straight into Bitcoin. What up, people? It's your boy Shubsy, and we're going to get into it today. I'm going to talk about why institutional adoption is here. I've got the receipts, I've got the data, and by the end of this video, you're going to understand why the next year is going to be very different. Let's go. All right, this is Larry Fink, CEO of BlackRock, the biggest assets under management, I think around $10 trillion. And watch what he just said.
We're seeing more and more legitimate long-only investors investing in it. There was an article about a foundation, endowment just bought a lot of IBIT. But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally at 120, at 100. I know they bought more in the 80s. Right. That's fine. And they're establishing a longer position. And you own it over years. This is not a trade. You own it for a purpose.
So sovereign wealths are buying, not were buying, present tense, they are buying. But here's the part that really should blow your mind. They bought the dip. They bought the $80,000 price level dip that just recently happened. So here's a rumor, the speculation that's going on. The UAE is the one buying this dip. They're trying to build a strategic reserve. At least that's what the rumor is. So this wasn't a retail panic sell or anything like that. This is nation level states buying dip. And as Fink said, this isn't a trade. You own it over years. And we're going to see why that matters when we just talk about what the Fed just did. But first, now while Larry Fink is talking about sovereign wealth funds buying dip, Elon Musk just validated something I said just in my last week's video, which is energy is money.
There's still some fundamental currencies, if you will, that are physics-based. So energy is the true currency. This is why I said Bitcoin is based on energy. You can't legislate energy. You can't just, pass a law and suddenly have a lot of energy. It's very difficult to generate energy, or especially to harness energy in a useful way to do useful work. So I think that probably we won't have money, and probably we'll just have energy, power generation as the de facto currency.
Bitcoin is based on energy, physics-based, and it's true currency. I actually made a video about this last week, and Elon posted this and said this the day after, which is crazy. But here's why that matters. You can't legislate energy into existence. You can't print it. You can't just make it. It's proof of work. Therefore, Bitcoin is the only form of money that's tied directly to the laws of physics. Dollars, the Fed can print them. Gold, we'll get to that in a minute. Because there's a 51-year-old secret about gold that nobody's talking about. So we've got sovereign wealth funds that are buying the dip. We've got Elon Musk validating the energy thesis. Now let's talk about what banks are doing. Bank of America, a bank, is recommending 4% allocation to their wealth clients. 5 years ago, if you said something like this, you'd be fired for suggesting this. But now it's official policy. If every Bank of America wealth client allocated 4% and actually did this, we're talking about hundreds of billions of dollars flowing directly into Bitcoin. It isn't even about if the institutions are going to adopt this, it's actually just when or how fast they will. And the speed is even about to accelerate just because of what Vanguard just did. Okay, so remember when Vanguard said they'd never offer Bitcoin ETFs? Look at that, in 2024. 2024, Vanguard CEO will never offer Bitcoin ETFs, and we're not going to change our mind around this. And now, in December 2025, 1 year later, they literally have $1 billion in trading volume within 30 minutes of listing the ETF. But here's what that really means. Vanguard was just the last major holdout. They control the deepest pools of long-term retirement, right, in America. Therefore, the flows, just like Adam's saying here, the 401k flows that are going to come into this are just going to be huge. I think I was looking at one of the tweets. It said, looks like all the older folks with wealth on Vanguard want some exposure to digital gold. And I completely agree. And they're going to even want more exposure because of what CFTC just announced. But before we get there, we need to talk about why Bitcoin is better than gold. So institutions are buying Bitcoin, but some people still say gold is better. Let me show you why I think that's wrong. So here's a great question from Jeff Swanson. If gold is the ultimate money, why did it get replaced by paper-backed dollars? Basically by nothing. And the answer is you can't verify the gold that is backing those dollars. That is the main issue with it, why it failed in the first place. Let me show you a video. Here's CZ at a conference.
I have a nice box here.
What is that?
It has some, I think it's Kyrgyz language. I took it back from Kyrgyzstan. He has a certificate. I got this from a very important person from Kyrgyzstan. Very recently, just completely by luck. So we take it out. It's pretty heavy. I'll put this down. You can see, like it says, Kyrgyzstan, 1,000 grams, fine gold, 99.9.9, and a serial number. Try it.
Yes. Yeah, it's heavy.
Is it real gold or no?
Well, I don't know. I mean, is this what you're trying to say? I mean,
So that was CZ, right? Owner of Binance, showing Peter Schiff, who's like the biggest gold bug on Earth, a gold bar and asks if it's real. And Peter's like, I don't know. I need my tools. I need to figure it out. But it gets worse. So this is another tweet that was just a reply to that video. Fort Knox gold reserves, the last time it was audited was 51 years ago. So in there could be something other than gold. We don't even know. We haven't audited in 51 years. Bitcoin, however, last audit was 10 minutes ago. The whole blockchain is audited. Everything is there. You can verify Bitcoin's entire supply in real time, and you can't do that with gold. You can't do that with dollars. So therefore, Bitcoin is the most verifiable money ever created. And that matters even more when you see what's happening with the dollar. If anyone's seen the show Money Heist, spoiler alert, in the ending, they basically replace all the gold with fake gold. They steal all the gold. And no one knows, not even the government's worried about it because they think the gold's there. And no one's verifying it. It's been 51 years. So that's exactly what's happening here, or, can happen. Okay, now let's talk about the elephant in the room, the Fed. The Fed just pumped $13.5 billion into the US banking system overnight through overnight repos. And this is the second biggest liquidity injection since COVID. It's bigger than the dot-com bubble and bigger than COVID. But here's what this means for Bitcoin, right? Last time this happened, COVID 2020, Bitcoin went from $4,000 to $69,000. Issue when we dropped from 126K to 89K or whatever we went to, the liquidity dried up. And now you can see it's coming back. Therefore, the setup is just identical to 2020, and we'll see what happens. Here's a post from Lynn Alden. Politicians are like, we're going to fix this. And you can see the $100 purchasing power, $17.92 adjusted for inflation. $100 from back then is around $32.50 today. The buying power been floating all around. It's basically damn near zero now. I mean, this is the issue, guys. In dollar terms, everything's going up. Stocks, real estate, Bitcoin, but you're not getting richer. Your money's just getting weaker. And Goldman Sachs just predicted what happens next. So liquidity's flooding back in. Now let's talk about interest rates. Goldman Sachs predicts Fed cuts rates in December, which is actually coming soon, more cuts in 2026, and rates drop to just above 3%. Here's a political angle. There's a new Fed chair coming 2026. Trump is already referring to him as the Fed chair, even though he hasn't been officially voted in. My prediction is he cuts rates like crazy, pumps the markets right before the midterm, makes Trump look good. And if that's not bullish enough, he sits on the advisory board for Coinbase. Therefore, we're entering the easiest money environment since 2020. And even the CEO of Fidelity is positioning for this.
Being it's a great group. And I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
Yeah, I mean, look at this. This is a great tweet from Evan. Basically saying the same thing that I just said. He sits on the Coinbase advisory. Kevin has it. He's just going to pump the markets. He's going to cut the rates like crazy, pump the markets. He doesn't just watch markets. He plays in it. He sits on the Coinbase advisory board, and he has skin in the game. So I guess we'll find out.
So I don't know if it's because I started early, or I don't know, maybe as I get older, I'm just kind of old fashioned, but like, I kind of like Bitcoin. I don't own tons of coins, but I own Bitcoin. And I think it will continue to play a role in the savings hierarchy of lots of people. And it is the gold standard, so to speak, in the crypto world. And it's been around, and it's solid, and it's persisted, and it's a good system. So I'm long-term very comfortable, and I think that will continue to be something that we will factor into our thinking and our quest to provide options for our customers. And I'd like to be able to be one of the people that continues to make it a little more accessible, because for all of the genius that went into designing Bitcoin, it probably could have used some IDO resources maybe to help more people engage with it sooner.
So here she says, I like Bitcoin. I own Bitcoin. It'll play a role in savings hierarchy. This is CEO of a $5 trillion asset manager, owns Bitcoin, says it publicly. But again, I mean, Fidelity was early. I think they've been it kind of since the beginning. So they get it. It's not surprising. It's just good confirmation. And now the final piece of the puzzle just fell in. We've talked about institutions buying, banks recommending it, the Fed printing money. Now let's talk about the infrastructure. CFTC just announced spot Bitcoin can now trade on CFTC registered exchanges. For years, right? Derivatives traded offshore, futures, options, all outside of America. But when Trump got voted in, he said they want to make America the crypto capital of the world. And it seems like that's what they're doing. They're building the infrastructure. And it's not just ETFs, not just MicroStrategy, actual spot Bitcoin in 401ks and retirement accounts. No more derivatives, okay? This is really just a final unlock. The US is legitimately behind Bitcoin now. So let's connect all the dots here. Sovereign wealth funds are buying the dip. Banks are recommending it 4% allocation. Vanguard finally caved in. There's a $13.5 billion liquidity injection. Rate cuts are coming up. And the CFTC opens up spot trading. And the price is down. I mean, guys, this is an obvious buying opportunity, in my opinion, not financial advice. Nothing in the fundamentals has changed since day one. It's just more people are realizing it and studying Bitcoin and actually learning what it is. And it's just adoption curve. I don't think we're heading towards adoption. We're already in adoption. I think we're at the tipping point here of the S curve. If you think we're in a bear market, I don't know what to tell you. I don't think that's right. I don't think we're entering a bear market. I mean, we're already down 30%, but I think it's just a normal market for Bitcoin. 4-year cycles are over. I think we're going to go only up from here. But hey, maybe I'm wrong. Drop a comment. Let me know what you think. Are we still in the 4-year cycle? Are we going to go through a 50% drawdown again and go back up next year, or 2-year bear market and go back up, shoot back up? Let me know what you think. Drop a comment below. Like the video, subscribe, and I'll see you guys next time. Peace.